Hi, this is Randy Finney with the Right Side of the Chart, and this is a closing market wrap for the week ending Friday, November 22nd, 2019. I'll take a quick look at the equity markets. Not a whole lot new to report. Well, we've been kind of stalling out here lately, but I'll go over the key points and then roll into. I had a question I just answered on one of the on the previous video I did earlier today for subscribers covering the trade ideas, and in that I said I'd cover crude. I meant to. I got to natural gas, everything else. I meant to in that video, and forgot to update crude. I just posted a reply. It's under the comment section with some charts, and I'll even get to that here. I'm thinking about changing things up when the markets stall out like this. What I'll do sometimes, I'll skip an end of day video for public. Yesterday, I at the end of the day, I decided, let's focus on what's making money. I talk about the markets every day. If all if you're just watching public content, then you probably think that's all there is. And again, I say you can't squeeze blood from a stone, water from a rock, anything like that. So, we've been focusing on, or I have, other things. That whether it's natural gas, coffee, biotech stocks that we have one that was mentioned a week ago and it's up 100 a couple weeks ago, it's already up 100%, things like that where you can make 20, 40, 50, 100% or more in a few weeks, where this market is just inching higher. So let's just talk about the technicals, and we'll kind of roll into just an update on that crude. It was an unofficial quick pullback trade anyways, but I had two inquiries on there under that post, so I'm going to include that here at the end. SPY had this uptrend line. We broke down, what was that, back on the 13th. We back tested it right here. We had a back test, second back test, kind of rolling over. We've started to roll over, not very impulsively, so we are below trend, or at least that trend line on SPY. But what this breakdown and back test so far is lacking is impulsive selling, and I think it's coming. I think it's coming next week. Hey, I thought it would be coming before that. Doesn't mean it's gonna. The thing is, we haven't had any sell signals, so I'll tell you why. We have those bearish crossovers I've talked about. They're in play now. There's a couple things going on. So there it is on SPY. We continue to confirm that bearish PPO crossover. Maybe it proves to be a whipsaw, but as of now, like I've covered before, there's the crossover. You can do this, put a PPO histogram on a SPY or QQQ daily chart, just put the line there when you had clean separation and just see what happened afterwards. You usually have at least a tradable pullback, if not a larger correction, which you could swing trade. And again, it's not just that. I don't use a PPO bullish or bearish crossovers as standalone buy and sell signals. I use a conjunction with other technicals. So that's in play. Same story on QQQ. The bearish PPO crossover is clearly intact. We had the signal histogram turned red the other day, but I said it was basically the lines were kissing back on Wednesday. We went down Thursday, which means the PPO went deeper into a bearish territory after the crossover. The histogram did, and now again today. Now look, you might say, how's that, Randy? The QQQ was up. It was up. That's first of all flat, 0.06%. Even 0.1% or a tenth of a percent is effectively flat. Yes, it's a green close, but what happens? These are momentum indicators, and if you have slowing momentum, think about throwing a rock up into the air. It's going to start to stall out, then it goes down. So now, even when you have something going up like this, that's strong momentum. So even a sideways day, it's still the momentum has turned, and it's to the downside. Now, start to move up here, yeah, you'll get that back. The PPO crossover will prove to be a whipsaw. Why is it so important then? It's not super important. It's just one more notch, one more check mark. It's been a long time, been waiting. We haven't had any solid sell signals for a long time. It's an uptrend. Make no mistakes about it. But it gives you a check mark because now, at least in my opinion, this is me, this isn't in textbooks, something I've just incorporated into my trading over the years, we have what I call confirmed divergence. So before I talked about this, and it still could happen, these are momentum indicators. You had potential negative divergence when it's heading up because it could continue to head up and it could take out the previous highs, and then you no longer have the negative divergence that typically these big corrections come after. However, so I like to say, you can confirm the divergence effectively once you've effectively put in a lower high, and that means a peak. So I like to use, once the PPO crosses down, you then have a lower peak. That's what I'm referring to here. So now that orange line is turned down, and I like to use the crossover to help seal the deal. it is not 100% effective. Nothing is in trading or investing, but again, it just increases the odds. That's all. So, like I say, I'll point these divergences out because, to this day, I repeat the same thing over and over. And I don't know. I guess people come into the videos and they seem to mistake, negative or bearish divergences for sell signals or for being short. No, it's just simply an indication momentum in the rally is waning and that an impending trend change is very likely. And at that point, you want to be on the lookout for sell signals. Sometimes you break support and that's it. Sometimes you back test for a while, and that's kind of what we're doing right here, right now. So let's just see what happens there. I just wanted to mention that we have had in the last week, this week I should say, several technical events that we didn't have before. We had the bearish crossovers, we had the breakdown and back tests, and prices starting to roll over, so it confirms our divergence. But there's still just a little more work to be done, namely those support levels. I want to see go 199.80 on this QQQ 60-minute chart. I want to see that taken out. I want to see my NQ 60-minute chart, that 8200 level I've been talking about. I pointed out a symmetrical triangle this morning that was in play. And last couple days I pointed out key levels, not key, I shouldn't say key. I said it, made it clear that's a minor support line. Hardly any, just a few reactions. We popped through it, looked like it was a breakdown, started to go, but we snapped right back above and closed above it. So number one, there's your no-go signal, because the 60-minute chart, you want a solid 60-minute close below there. And had we done that, that would have most likely opened the door to move to that 8200, where we'd probably get a reaction and then start what I'm talking about, seeing the markets kind of wake up and see those 1% plus down days. We just haven't seen them lately. We've come close, but not there. Volatility is starting to spike a little bit. You can see it here. And then the other thing that happened at the same time that NQ had that little whipsaw below that triangle pattern there is that ES, just as it did yesterday. So NQ, we've had two. The same thing happened yesterday. We had a break of a minor support level, but the levels that I've been harping on for the last I don't know, all week I guess, are these intersecting uptrend lines on the 60-minute chart. I know there's a lot of lines and levels here on this chart, but the ones that stand out, I probably should color code them for the videos. This one and this one right here. And so when we had NQ break minor support earlier in the week, each and every time it proved to be a whipsaw. NQ snapped back up, got back above there on the 60-minute candle. Why? Because the ES buyers were stepping in and buying support on these trend lines. So as I've been saying pretty much all week, you not only need to see ES or NQ break some of those minor support levels, you need to see ES take this out. So those are the levels I'm watching next week. If and when those break, looks like it's coming probably next week. This is my guess, but we'll see. As I like to say, support is support until and unless broken. So that's it. So if it breaks, then that should open a door for move down here, assuming NQ breaks comparable support. Maybe not, but maybe a little hiccup there, probably on 30.76 or so, and then somewhere down here to these. This is kind of a target zone right now that's open, and it's again not a big, at this point in time. Those aren't obviously big targets, but the potential is there. If I was only trading this chart, somebody said you can't look at daily or weekly charts, you can only trade 60-minute charts. Well, that's all I could do all day is hit these little long or short trades that measured in single, maybe double-digit returns for ES, NQ, things like that. But fortunately, here we have the ability to look at long-term charts, daily charts that tell me that the negative divergences in place right now are actually larger in scope and duration than they were back here. Well, scope and duration, same thing there, really, how long they've been forming, than we had back here leading up to that big drop in 2019. Does that guarantee that happens again? No. Does it guarantee that if we do break down, that's all that will happen? No. We could have just a smaller correction, bigger one, or maybe the market just wants to power on through them. We get the Santa rally, the January effect, then after that for small caps, and lottie we go up there. But I don't, right now it doesn't appear to me. I just, I kind of keep things simple. Wash, rinse, repeat. Look at the way similar technical pattern. That's what technical analysis is all about. Whether you're trading wedges or head and shoulders patterns or triple tops, hop and handle patterns. It's recognizing similar technical postures, price action, volume action, things like that, that have set up in the market or in stocks in the past, and then using those to try to predict where stocks are going to go if history repeats itself, which doesn't always repeat itself, but it often rhymes. Okay, moving on. The other things that were technically significant this week, and probably the most, I'll say more so than those indexes, because remember, they broke down, and then I pointed out last week, you know what? The top four, the four largest sectors in the S&P 500 at the time SPY and QQQ cracked underneath, had not broken down. And I promise you this. I can't promise you a lot of things in trading and investing, but I promise you the stock market's not going to drop without these four largest sectors, and that's XLK, the largest by far. That hadn't broke, but it did this week. It broke down Wednesday. Like I said, it was a marginal or questionable breakdown, so you give it the benefit of the doubt. If you're close enough, you have to zoom in here and say, did the body of that candle, did we close below or above? Then you say no, you're on trend. You don't consider that a sell signal. And because you're using a daily chart, you want to see a solid daily close, meaning one of these daily candles down below a trend line, and as I like to say, the redder the better. So that certainly was, like I said, it was questionable, but then we had a follow-through red candle, another follow-through red candle today. What's lacking so far is impulsive follow-through, but we are stair-stepping lower on, again, the most important sector right here. We made another low today, closed down, red close on tech. So let's see what happens next week. So I'm seeing, I guess all I'm trying to tell you here is I'm starting to see what we didn't have before, those more and more check marks forming. So there's XLK. The second largest sector in the S&P 500 is healthcare, XLV. That's still healthily or comfortably above trend right now. This could change in a day. One big candle that might look like this could take that out, but as of now, it's up there, and you have to consider that because it's about a 14% or so weighting in the S&P 500. So it really would help if you're looking to, let's say position for a swing short trade, to see that breakdown as well. XLF financials broke down on Wednesday, but then and followed through with a second red candle, but about almost a flat close. So really not impulsive selling. And today they were up a little bit. They're still below trend. So where I'm going right now, XLK and XLF are below trend, and now the fourth largest XLC is above trend, just like healthcare. So of the out of those four, which again will make up well over half of the S&P 500, I've talked about this. It doesn't matter, unfortunately, for these little guys, what basic materials at less than 3%, real estate, the REITs at 3%, utilities, 3%. It doesn't matter what they do. They have very little impact on where the S&P 500 goes, even though they are one of the 11 sectors. So that's why I focus on those four. So right now, to summarize, two of the four, technology and financials, are below trend, but not really, not anything convincing or impulsive yet. Maybe they drift back up, maybe they back test, but watch for the other two to break down, and then watch, most importantly, I think, for more follow through to the downside next week. Because, once you break trend, sometimes you get a big red candle just like this. See when XLK broke back here, and that's it, and boom, off to the races. Other times you break down, and maybe others don't see it, maybe others don't believe it, but if you continue to go, you kind of hit that point of recognition, I like to call it, and I think that'll probably come next week if we take out today's lows on XLK. That'd be my guess, but again, I gave you some other support levels to watch on NQ and ES, and you want to watch those. Okay, and now let me center this. Let me pause the video and get all these centered here. Okay, so again, I might on the slow days, or I should say slow weeks, instead of skipping videos if there's nothing to update, and maybe I'll do a end of day video and we'll pick. I was thinking something along the line. Maybe pick 2 trade ideas that have recently closed out on the site, for subscribers. Pick one winner and one loser. The loser, we can look at what I did wrong, what went wrong on that trade, what could have done better, and the winner, what worked out. So something along those lines. This isn't that. I just wanted to do an update because again, I forgot it in the midday update for members. I said I'd update it. So this started yesterday, posted in the, might have been in the trading room first, that crude was offered an objective short here at the 58.67 level. It hit a measured target for that bull flag pattern breakout. You can see the flagpole, trying to get a tool here, flagpole, bull flag, and you take the measured, the distance to the flagpole at it. So I said it was slightly, it was close enough. And when you have resistance, even though the measured target was a bit higher, there's your resistance level. You can see all these reactions here that had me put that line there. So that's it. So short there. These are your pullback targets, and I made it clear I didn't have the highest convictions, or at least I did on at least a little pullback, but where it goes, and I'll still tell you that I still don't have the highest convictions. I covered mine today just above 57.50. That was that first target there. And remember, these are unadjusted targets if they're not official trades. If you remember, it'll say T1, T2, and I'll make it clear if it's an official trade. And in swing trades, this was only a 2%, a little over 2%. Official trades, we're usually looking at double-digit returns on the swing trades that are going to last usually at least a few days or a few weeks. So then again today, this morning, you can see they're all time stamped. I updated it, after the market opened. It once again was offering an objective short. It had a little initial pullback, but that wasn't it. That's not what I was looking for. It's popped right back to that 58.67 resistance. Offered again a short there at that level, or you could short or add on if you took a starter and wait for a break of this trend line, and boom, for that targeting 57.50. Line breaks always mean that's where a reaction is likely. A reaction is what I define as a consolidation and or bounce off that level. Sometimes you just kind of consolidate on either way. So that was this morning, and then about a couple hours after that, we hit that first target. That right there was a low of 57.52, and again, if I'm marking up a support level when short, I always cover a little bit above the short. The support level in case the buyers step in early. You don't want to. I don't try to get greedy and milk out every last cent on a trade, but that's the level where I expect a reaction. But again, and if it's a long trade and I'm targeting a run up to 58.67, I'm going to set my sell limit order at 58.62. Depends on where I entered and what trade. This again was a very short-term active trade, and in fact, I probably should add it in the day trading group. Because that's what it was today. And then, but of course, if you entered it yesterday on that first tag, it would have been an overnight, a one-day trade. And so there it was. And we hit it. That was that first bounce, or it bounced at 57.52. And then the low a day in crude, exactly 57.50, right on my support level, followed by another bounce. So, that gave you an opportunity to get out, or if you want to stay in it, I'll just kind of throw this out there. It's still an unofficial trade. It's a possibility, but it's Friday. I don't like to go on 2 days. When you take home a swing position, on Friday you have 2 extra days of overnight risk. That means missiles can fly in the Mideast, something can happen over there. So, it's, again, not a big trade, but that's, when you're looking for a short pullback trade, 2-3%. Get out, and that's about as minimum, unless I'm day trading. If I'm day trading, it happened to again be a day trade, but I had a position from yesterday, so that second one was just another entry, so it was a one-day trade. But if I'm day trading, go for a quarter point, 0.5%. It depends, because you take a much larger position, you don't have any overnight risk. And in futures, during the week, you technically don't have that overnight risk either, because futures, if they're liquid like crude or NQES, they trade around the clock, so you can go to sleep with a stop loss order in bed and not have to worry about a gap on it. You see gaps on futures like this over the weekend when they close on Friday and then they open again Sunday night. So at that point, yeah, you are subject to gaps. You can get big spikes up and down during the day, but at least you have a stop loss order. It should be hit around that level, and that's it. So there it is. If you for those of you on the site that took it, little bounce, and probably I'd put the odds on that it comes down there, but again, it's just not strong enough odds for me. Sometimes, depends how I'm feeling and what else I have in my portfolio, but that's it. So if we continue on down there, look for the next target around 57.07 and or the trend line just below, or call that the third target. It could come in together if and when we get there. So that's it. Other than that, I'm watching the energy stocks still, and actually have some of those, and the energy sector. So I'll try to follow up next week. I think I shared a couple of those setups recently, And I know in recent months I have with XES, XOP, the energy ETFs, and some individual stocks. But crude's starting to firm up here, and this is just a very short-term micro call on an hourly chart, not the daily chart. We're not going to get into that now. We'll just leave this video here, and I think that's it. So let's watch those levels tomorrow. Like I said, we're getting some check marks on the indexes. Trend is still very resilient. You gotta, that's why I said give it the benefit of the doubt. But I still think there's nothing wrong if you have a little starter short. You go into the weekend with that, with the signals we had. That's what I'm doing, and I can always add to it should we gap down or you have some continued, continued sell signals early next week. And if not, we go up and we take back all those trend lines I showed you that just broke, especially XLK. Then I can just throw it away and move on to the next one. But again, trading the indexes, at least at this point in time, is a very, very small part of what I'm doing. I'm not doing many trades there. There's just not been, like I said, it's like squeezing water from a rock. With the S&P 500 up now, what is it, up 3% in the last I don't know, 9 days, 10 days, wherever. You go back here to this candle from November 4th to where we closed today. Oh, no, I'm sorry. What am I crazy? 1%. There's that runaway market. I think I heard somebody refer to it as lately. There's the S&P, the broad market. Since that gap up right there. So it's moving up. It's not going down, but it's certainly not. If you have the FOMO thing going on right now, fear of missing out, I would look at other things like the biotech stocks and other things that we've been trading that have double-digit gains within a week or two. And again, it's just not my cup of tea right now, the broad markets, but it might be soon. I'm gonna wrap it up here. You guys have a great weekend, and I'll talk to you next week.